Hey harvesters, and welcome to the channel where we run simple and straightforward options trading to generate income. My name is Matt, and in today's video I'm going to go over the trades I executed for November 12th. Today was a quick easy day. Made two trades, made $196. Nothing too eventful there. I locked in most of my premium gain on Monday. I made $4,000 that day. So then the last couple of days have been quite light. Yesterday was $125. Today was $196, but I'm still collecting premium every single day. And it may not seem like much, but $200 a day over a 250-day trading year is about $50,000. So I'm going to take my W's where I can get them. And in this video, I'm going to talk about the trades I executed for November 12th. Then I plan on talking about the state of the union of where my project's currently at, how much premium we've made in total, some averages, and then we're going to move on to, lastly, the trades I plan on executing for tomorrow, November 13th. Let's get the ball rolling. For all of my returning subscribers, you know me, the first thing I like to talk about is my account value from the Robinhood screen, just so that when I ever go to the spreadsheets, I'm using the exact numbers that were in the Robinhood, so I'm not just making up numbers. The current account is at $215,485.82. I have a couple of options on the screen. I have a lot of Tesla calls expiring on Friday. I definitely went a little bit too heavy on Tesla this week, but the premiums were too good for me to pass up. And, sometimes you just got to get bit by the stove to not put your hand there. So we'll see. I haven't really been bit yet, but I can definitely see the market kind of trending downwards for Tesla. So I might be stuck with them for a little bit, but we will see how everything plays out as it plays out. Currently 300 shares of Tesla, 200 shares of QQQ, VU. That is now my new my retirement investment strategy. I am investing into my 401k up until my company's match. Anything after that, that would be a theoretical, max out your 401k. I'm now throwing into my Robinhood so that I can increase the pool of money I have in the account so that I can borrow more money or I can use leverage with margin. But ideally, this VU shares, I am never allowed to touch, share. Maybe if I get to 100 shares one day, I might do very conservative options that are super out of the money, maybe like 5 deltas, 10 deltas, just to make a little bit of extra money, but not risk being assigned on them and then being taken away. But cool, let's head over to the spreadsheet and let's start talking about what happened for November 12th. Let's talk about my current trade setup right now. I have a couple of options that are currently active. I had QQQ that I ran on Monday. Basically, the market was quite low. Yeah, it opened at the 624, but then it went down pretty quickly, closer to about 621. So ideally, instead of taking bad premium for about a week, for dailies, I think the premium was about $7 a day. So if I was choosing my strike price and not going below my cost basis, the premium would be $7. One of my core principles is not selling below my cost basis, and by staying true to that principle, instead of running dailies at making $7 a trade, I decided to go out a week, and then I locked in about $228. Currently still active, and it's nowhere near getting expiration. So that's one of my week longs, and the remainder are all of my Tesla options. So I had 3 covered calls because I own 300 shares of Tesla. That netted me a lot of money on Monday, and then I also ran a cash secured put. I think I did that on Tuesday. All those are currently active. But then the trades I actually executed for November 12th was 2 QQQ cash secured puts. So let me dive into those. So when I opened up my Robinhood, QQQ was trading at the 624.83. And for cash secured puts, I have 2 thought processes. Usually, if I have some buying power available or some cash available, I'm going to offset how I trade my cash secured puts. So this first one, market was at 624.83. Ideally, I would have liked to own another 100 shares of QQQ because heading into November 12th, I only had 100 shares. I usually like to have, 200 to 300. So ideally, I'm actually trying to bolster it. I'm trying to choose a strike price that is going to be relatively competitive. That's going to get assigned. It's also going to help me generate premium. But I decided to settle on the 622 strike price and then the 621. I like to ladder it. The 622 was more likely to hit, but then it actually did. So this one's going to get assigned. So I bought 100 shares of QQQ today at the 622. made $93 of premium, was assigned. So then tomorrow I do have 200 shares of QQQ, and I'm pretty much going to sell a covered call at the money so I can lock in as much premium. And then lastly, I had a strike price of 621 for QQQ. That was not assigned, but I locked in $103 of premium. So in total, made $196 of premium. So I was pretty happy about that, especially because most of my capital is tied up in Tesla. So the fact that I'm still making, $100 to $200 every single day when about, I think 50-60% of my capital is tied up, it's pretty good. So let's head over to the State of the Union of this project. Taking a look at November 12th, like I said, $196 of premium generated. Count went down a little bit from the previous day. Yesterday was at 216,000. Today dropped down to about 215,000. So my total return since running my own options is 43.12%. And during that, 7/8 month period, I made about $67,000 of appreciation and premium gain. I combine both of those because at the end of the year, that's what I'm going to have to pay taxes on. So it's just kind of like a good gauge to see how much I'm going to have to pay in taxes. Looking at my trade win percentage, I'm winning 98.66% of my trades. And that's the one thing I'm trying to highlight with this strategy, guys, is it's relatively safe if you follow a couple of core fundamentals. I really only have two. One, the first and foremost is don't sell below your cost basis. There's going to be times when the market is, going opposite of what the share price you bought. You're going to have bad premium, and I would rather you take lower premium and maybe push out expiration dates than potentially realize a loss. Of course, you could be, you can have an option that's below your cost basis, but then be available to then roll the option. Both times I tried to do that. It definitely, my inexperience in rolling options caused me a little bit of pain. The first time I did it, I rolled my option up, but then I didn't roll it up high enough, got assigned there. And the second time I got my option assigned, I thought it was not going to get assigned, but then there was some weird nuance that, the leap, how would I say this the right way? The investor that has the long call option basically can assign it, 30 minutes to an hour after the bell rings for Robinhood. So therefore, once the market hit, I didn't decide to roll my option because I'm like, oh, market is not going to, my strike price wasn't at the money when the market closed. So I thought, okay, I was good. So I didn't roll it. But then 30 minutes later in the after hours, the market went up, and then therefore my option got assigned. So there was like two kind of weird, or one weird nuance, and then one just bad trading on my part. So ideally, outside of those two mistakes, when I went back to my core principles, have not lost money. Cool. So with that being said, 149 trading days, 2 losing, 147 winning. That's a 98.66% win rate. I will take that any day of the week, any week of the year. So yeah, there are about 33 trading days left in 2025. So 2025 is dwindling, which is quite crazy. But that means we have a little bit more time to generate more money. But at the same time, I'm also not a big proponent of forcing anything. I've already made a good chunk of return this year, making 43%. Can't really ask for anything better than that. But the premium that I'm averaging per day is about $450. If you look at the average premium per week, I'm averaging $2,164. And then the average monthly premium, this number will populate again once November completes, but we're at $8,014. And since for 2025, I'm not going to trade for a full calendar year, I decided to project out what my portfolio would look like, or what some return would look like over a year period. So what did I do? I took the weekly premium, multiplied it by 52 because there's 52 weeks in a year, and then it got to $112,000. So theoretically, if I traded this full year, this is the number that I would be expecting come December 31st. However, I started trading my own options in April, and we only at $67,000 right now. But I'm optimistic we'll definitely hit 70, but then maybe hitting 80 would be a nice treat for the end of the year. Cool. Moving over to the weekly premium. Massive day on Monday, and then the last 2 days were, very average, $125, $196 of premium. But for this week, we're at $4,386 of gain. And if we look at what we have made for November thus far. We're at $6,647. And we've already just mentioned the yearly number, so I'm not going to repeat that. It's cool. That is all of the numbers for the State of the Union, state of the project. Let's head over to Robinhood. I'm going to talk about what I plan on doing for tomorrow. Okay, guys, now that we are back at Robinhood, let's take a look at my buying power. So theoretically, I have $426,000 I could use to buy more shares of whatever investment. I could probably buy, 500 more shares of QQQ if I really wanted to. However, I do not want to over margin myself. Not that QQQ isn't a good investment. It's just that I don't like to use more margin than a $1-for-$1 amount of my cash value. Because theoretically, this buying power, $426,000, if I sold out everything, it'd be like 2.5 times what my cash value is. Not necessarily too interested in risking my cash, because right now market's good, but at some point, for whatever reason, hedge funds might think AI is overpriced. I don't think that's necessarily happening. I think AI is going to be the future, and there's going to be continued investments in AI, in the chipsets, in the semiconductors, in the energy infrastructure to power all of that stuff. It is the new industrial revolution. It's the new agricultural revolution. So we are in a interesting phase in humanity where technology is really going to propel forward fast in the next 5 to 10 years. That being said, let's take a look at what I'm dealing with. I have about $106,000 of event contracts. So event contracts, the margin I'm using right now, I'm only using about $43,000 of margin. So for me to reach a $1-for-$1 amount of my cash value, I can actually, also this options collateral. So really there's about $85,000 used. So I theoretically can use about another $130,000 before I really reach my like 1-for-1 cash value, but I'm not going to really do that. I think tomorrow I'm just going to run my 2 covered calls on my 200 shares of QQQ. And then I might run just 1 cash secured put, just keep everything nice and safe, just so I can lock in a little bit more money. Let's take a look at what some of those options might look like. So to run a covered call in Robinhood, hit this sell call button. And because 100 shares of my QQQ have already been, set aside for a week-long covered call, I theoretically can only run 1 covered call right now because I only have 100 shares that are not tied up in a specific option. Currently, the market is at this 623.31. I will say my option was signed at 622 and it's already up, $126 at 623.26. I love it when the market does that. Okay. After jumping off my bragging horse there. So let's take a look at how I actually choose these options. So the first thing, whenever I pull this chart up, I go to where the share price is currently at. It's at that 623.21. And the first thing, without even look at the strike price or, a delta, I look at the premium. For the premium, for a covered call, ideally, I would like to choose something in the $100 range. So that's usually $1 to $2 away from where the market's currently trading. I think this 625, strike price, making $110 of premium is quite lucrative. Do I really need to take a look at what this delta looks like? Not really. Just from looking at the raw, premium to share price, because I bought QQQ at this 622. If it were to go up 1, 2, 3 strike prices and actually get assigned, or I sell this, 100 shares at the 625, I would make $300 of appreciation plus this $110 of premium. So that one trade would have netted me $410. Now imagine if you have, 4 or 5 contracts or 400 or 500 shares of QQQ, at different price ranges where you can also lock in that kind of money. So that's how I plan on playing it for tomorrow. So tomorrow, for my 100 shares of QQQ that I currently own, 625 strike price. Hopefully this $110 is there when the market opens. We're going to lock it in, and then maybe end of the trading day, it hits that 625. But if it doesn't, I'm just going to rinse and repeat and maybe choosing a different strike price later on. So that's my 100 shares of QQQ, and let's take a look at what this cash secured put is. So to run a cash secured put in Robinhood, sell put, let's head down to where the market is trading. It's at that 623.22, and ideally for my cash secured puts, so I have 2 different strategies. One, how I run my covered calls, and the other one, how I run my cash secured puts. For my cash secured puts, I'm actually trying to get a better share price buy-in point. Like I will forego some premium so that I can achieve a better strike price, because if I choose a better strike price, running the covered call when it's assigned, it's going to be a lot easier, and it's more easier for me to sell it, and then be easier for me to choose a better premium. So really, my cash secured puts, I'm setting up good trades for future investments and future options. So ideally, for my cash secured puts, I will actually look at delta. So that delta, like I like to range somewhere between 0.2 and 0.3. And just from knowing historicals, that's usually $3 or $4 away. But since the market is going up instead of down, and it's a little bit different from where it closed, these premiums seem a little bit high and these deltas seem a little bit high. So ideally picking the right delta might be off, but if we were to use what we are looking at, this delta, this 0.22, maybe this set 617, probably, yeah, 0.26. So delta is the likelihood of this option executing. So there's a 26% chance that this 617 put is going to get assigned. And the way puts work is the market has to go down to 617 before I would get assigned, versus call, the market has to go up to a strike price to get assigned. So tomorrow, if this is available, I don't think it will be, but I probably would choose a 617 strike price with a $107 premium and with a delta of 0.26. So the numbers aside, tomorrow when the market opens, I'm just going to look straight at the delta, and then that's the trade I'm going to execute. Hey guys, that pretty much wraps up the video. Running 2 trades tomorrow. I theoretically would make more money if I ran another Tesla cash secured put. However, I am way too overutilized into a single stock. I theoretically could go to like an Amazon stock or an Oracle stock, maybe Meta, one of the other different tech companies or the cloud providers. But ideally, I think I'm already too heavy into an individual ticker and individual stock risk. So ideally, I want to just continue going towards the ETF side, QQQ, SPY. If, not really a fan of IWM, the small cap guys, it's nice because you could run those daily, but my number 2 principle is invest into good stocks, and some stock in IWM might not necessarily be a great stock. So for me, I like to choose winners and then just stick to those winners. So I like QQQ, I like SPY, and then I have like 4 or 5 stocks. You guys have seen me trade between like Oracle, Amazon, what else? nvdy. So yeah, those are kind of my 4. There's probably another one I'm missing, but yeah. But that's the video, guys. I don't really have anything much more to say. That's pretty much how I run my options. See, as you guys can tell, it's nothing crazy and too groundbreaking. It's quite simple. So for any new investor that, is afraid of running your own options, the way I would highly avoid the buy options and just go towards, owning a good investment, 100 shares of it, and just running covered calls on it. You really can't go wrong doing that strategy. Yeah, it might not be super sexy. It's not a home run, but end of the day, 5 years from now, if you're consistent and you're able to produce income, this is going to help you in multiple facets of your life. Yeah, guys, that wraps up the video. Hope you're doing well. Hope you're doing well out there. Hope the accounts are growing steadily as mine is. Hope you guys are harvesting well, and I will see you at the next video. Matt out.